Where do you see the industry, crystal ball, forward-thinking statements? But as you said, let's let SAFE take its time. That benefits you as a company. But where do you see this industry as a whole in 3 years from now? Hey everyone, welcome to our latest TDR Cannabis Exclusive. I am your host, Shad Dales, as we continue earnings season. And next up, we have Verano and their Chief Investment Officer, Aaron Miles, joining us. Good to see you, sir.
Yeah, Shad, thank you for having me on. It's great to see you.
Busy time right now, I think, for the industry. It's been I would say best described as this earnings season featuring all the top MSOs. I don't want to say nothing good has happened, but nothing bad has happened either. It's just small steps in the right direction as a lot of companies are restructuring with a lot of strategies as to what's most important. But for the most part, how are you enduring these times right now for the overall industry?
I think for us, it really started from the inception of the business, right? I mean, the way that we built, we always stayed a step ahead of growth, but never too far ahead of growth. And we never made any bets or assumptions off of federal moves. So for us, we focus on free cash flow generation. I think the biggest thing that we're doing is just operating as lean and mean as we possibly can. Because if you put a good product into the market and it resonates well with your consumer base, in these tough times, it's all about stabilizing your business. So I agree. I mean, it hasn't been, the 100+% year-over-year growth we saw a few years back. But I think, the theme of this, and especially some of the stronger operators, is really stabilizing your performance and positioning yourself ahead of, the growth opportunities ahead.
Operations very key, and a nice step in the right direction based on your latest earnings, which is now 2 consecutive quarters of positive free cash flow from operations that was achieved. So as I said, I don't want to say a small step, but a right step in the right direction. You must be happy with the overall performance in the last quarter, given the times that we're in.
Absolutely. And that's 9 consecutive quarters. And that's every quarter that we have been public of positive operating cash flow. And 6 of those 9 have been positive from a free cash flow perspective. So you're going to see a lot of fluctuations in margins. We're rising our inventory that we have. So you're going to see some choppiness in some of the margin profile. But what we're doing is we're shifting the attention to our free cash flow profile. And one of the things we really want to, really relay to the market and show to the market is that we're meeting our debt obligations. We're maintaining our tax balance and paying that down. And we're, obviously still investing through CapEx, but then we're projecting 50 to 75 million from a free cash flow perspective for this year, which we're extremely proud of.
So as we dive further into the numbers, you showed, as you said, double-digit growth on a year-over-year basis. Produce, as I said, free cash flow. But one thing is for sure, which is a nice step in the right direction in these challenging times, is, like you said, it's all based on business fundamentals. So as a whole, what would you best describe the overall performance of this last quarter?
I would just say, the theme that we said on the call, I mean, it's solid, right? And I think what we've done is we've stabilized our mature states. And we position ourselves in states that are really affording us growth. In these, Connecticut's one of those that just turned rec, and that is a market that we definitely got ahead of from an adult use perspective. We're doing the same thing in Maryland, and we have 2 other states, Florida, PA, and actually 3 if you want to include Ohio in that we're really positioning ourselves ahead of growth. So I understand that people think this is a very volatile, stressed environment, but it's one that we think that we can very much thrive in. And we're going to do that from an operations perspective. Market's turning on, but we're also going to look at adding potential pieces to our business. Yeah.
Well, one of the things noted in the financial results was your SG&A expense of 75 million or 33% of revenue came down significantly from 36% sequentially. This obviously indicates a good level of cost control. So along with the slowdown in CapEx, so do you think you can get to a net income positive position later this year?
Yeah, I mean, listen, it's not out of the realm. We don't guide to net income. We've focused more on the free cash flow profile. Last quarter we had some impairment charges that obviously overinflates what a net loss would look like. But we have the ability, and we think from a profitability perspective, I think our free cash flow is going to ring true with really what we can generate as a business. And to note on that SG&A, the 33% of revenue that does include depreciation and amortization. As well as stock-based comp. So if you actually exclude those, it was at 26%. So we've guided on an adjusted SG&A perspective, 26 to 28%.
Wow.
So we very much pride ourselves in how we efficiently manage this business. And when you go back to the inception of Verano, I mean, the way that we spend, I mean, every dollar counts, right? Like we're in a battle every day. So the way we manage through our vendors and our costs and the SG&A, we're on top of this on really a weekly basis.
What excites you going into Q2?
Listen, you're positioning ahead of Maryland, right? That is a legacy state for us. We have 4 dispensaries and over a 40,000 square foot cultivation facility. So that's another state that we can show how prepared we are for an adult use turn on. So I think, going into Q2, that is definitely, probably the top of the heap. I would say New Jersey continuing to strengthen our footprint there. Connecticut continuing to advance adult use and getting ready for our social equity. We have 6 social equity joint venture partnerships that are going to be coming online. One of them we anticipate within 60 days. And you're continuing to strengthen in Florida. I mean, we were number 2 from grams sold in the state. That doesn't show dollars behind that, right? We're all indoor, high quality flower, and yeah, we do discount, but not at the level of some of our peers here. So I would say what excites me is really just kind of getting into a runway of that stabilization of the business, and then what the market can afford, right? I mean, Maryland's come online. Does the state make any moves? And then you're cautious. I'm even scared to mention this on here, but like say federal moves. I mean, there are some big swings that are being taken in DC right now. And, we've been trying to bunt the baseball and, sooner or later you're going to hit one out of the park. And we're hoping, that we're really well positioned ahead of that. But I think what excites me is the conversation is continuing in DC, right? Like you don't want that to go away. And we don't have a near-term optimism on anything getting done. But I can tell you just it still being included from a bipartisan effort and being
bipartisan
discussed.
Support, right? That's something that has to be done. Support.
It's huge, right? And so that excites me. And the potential, going back, let's take a step back, right? In December, it didn't pass. And, everyone, it was doom and gloom. And, for us, we were disappointed, but we were like, nothing changed for our business, right? Like we were still operating in this fashion. Everyone needs to look at what these growth drivers, that the potential growth ahead of the space are. And you think about just getting credit cards, like let's just say that. I mean, that's a massive boom for the business, and basket sizes come up, online ordering is easier. And then you don't have to worry about these workarounds with debit cards. And so that in and of itself is massive. But then you start to think about institutional dollars and capital markets, and then states legalizing. I mean, Florida alone could be a standalone business for us if that turned on adult use. So, I mean, we have a lot of runway, but again, there's no giveaways in this space, and you're fighting every day for every dollar that you're making. And we're not taking any victory laps right now. We're keeping our head down, and we're going to continue to show the market what we're capable of.
And you get rid of 3 ugly numbers in one letter, 280 and E.
we highlighted that on our call, and if you were to account for the 280 impact on our 2022 performance, it's over $100 million. So if you use that as a run rate for 5 tier 1 MSOs, you're looking at $500 million. It absolutely is astounding what we could do with that if we could reinvest those dollars back into the business.
Did you see some of the comments that Senator Elizabeth Warren said yesterday regarding the safe banking hearing?
I did a little bit, yeah. I mean, we've been obviously paying close attention to it, and it seemed more pageantry than anything else. But
we had a Twitter space last night. It sounded positive, but everybody's like, "Don't believe her, and that's just the reality we're at right now, right?
I think the concern here is, you're ahead of an election year, right? Or an election, not an election year, right? And in 2024, there's going to be a lot of jockeying and positioning for votes. You still have the rescheduling aspect out there, but for us, it's we want this to take time, right? Actually, in all reality, the longer SAFE takes to pass, the stronger a company like ours really becomes. And, but for us, we want this to take time. We do not want this to rush across the finish line. And it sounds like conversation being had is positive. It sounds like things are starting to roll out the way that we would want to have it roll out. But I mean, we're going to spend a lot of time in DC. I'll be out there all next week, and I'm telling you, it's you need to educate. I think
we got to have you on a Twitter space. A few other executives. We had a great one last night, but including Jason Wild. But that would be great if you could get some feedback. We'd love to have that sort of thing. But I want to get into like some of the numbers because it stands right now. You got $95 million in cash, and the bulk of your debt due is in 2026 and beyond. So now generating free cash flow. So your balance sheet appears to be obviously in good shape. So there's other MSOs that are not in the same position and hold some valuable assets. So in terms of companies, your focus and mindset, are you in accretive acquisition mode, or are you considering it? Or I know you're focused on preserving a healthy balance sheet, but those opportunities you have to consider at this time still too, if that opportunity presents itself, is it not?
Absolutely. You know what? I look to deploy in my role. I look to deploy capital in the most efficient manner possible. Right? Is that paying down debt because we have optionality on that 350 where we can pay down the first 100 million with a 1% prepayment penalty, which is massively beneficial for us to pay that down. But we also look at assets that are available. But we're not going to overpay. I mean, there are a lot of distressed assets out there right now. I'm having conversations on a daily basis. But we have the luxury of being very selective and looking to not overpay for an asset. So I would say we're absolutely want to, expand into new states and expand our current footprint in the states that we're operating in. But there is definitely going to be opportunity, but I can tell you we are very patient. And I think that it's kind of counter to the fact of us racking off 15 acquisitions right after going public. But I can tell you that was all very strategic and very calculated. So we are looking at assets. We're looking at paying down debt. We're looking at, obviously the tax balance because we have deferred taxes to, lower costs of capital and penalties in comparison to our debt. So wherever we see the best means, we're going to deploy that capital. And now let's think about this. Florida turns on, ballot initiative, turns on adult use. We would be remiss not to, funnel as many dollars into that state as we can. So, I mean, we have a lot of optionality on where we deploy capital, but, our cash is up, from 86 in Q4 to 95, and we're projecting stronger cash balances going forward. So we're very happy about where we're at from a balance sheet perspective.
Go ahead, finish your thought.
Yeah, I was going to say, I mean, and that's the luxury of we got our debt refi done, last year in a very, rising rate environment. So that 2026 timeline, it gives us a little bit of flexibility on when we're going to look back into the debt markets to get that renegotiated. But it also gives us time to evaluate what safe's going to look like, right?
Yeah.
I mean, ideally, we have no sale leasebacks. We own, the bulk majority of our real estate. So when you think about what a safe, passage world looks like for us, I mean, we could get a line of credit, 400 million, rack off, low single digits, and then tap into it when we need it. So we have a lot of optionality from a balance sheet perspective.
That was the sentiment we had last night. What was like, look, challenging times, but when this does pass, and it will pass, we don't know when, this industry has more upside potential than anything out there, which is why investors keep coming back. Yes, it's challenging times, and yes, it's been around 6, 7, 8, 9 years. Here's the crazy thing is we're still in the first or second inning of all this. That's the reality. But you talked about debt, and one of the things I wanted to bring up, which I found actually very, very interesting, is that you included in your debt liability an $18 million community bank loan, which is due in July of 2047. So can you predict what the world's going to look like in 2047?
If I'm still in cannabis, we have a lot of problems here. So I'm going to be in a mountain home somewhere and hopefully reaping the benefits of all the hard work. But,
listen, are you able to secure a loan with that debt maturity of that length?
Listen, we can get creative on what we do. And when we own our real estate, we're not tied into, these sale leasebacks, which can be a little bit onerous. And I can tell you, we're working very creatively at the state chartered, level to get mortgages on our facility where, you could look at mid to high single digits is kind of where we've been netting out with some of these loans that we've been taking out. And what you can do is then, take that and then, lower your cost of capital by, bringing down that debt balance by paying down that 100 million. So, listen, we have a lot of valuable assets and again, we're going to leverage them in the capacity that we see most favorable.
I like to create YouTube shorts with some good sound bites. I'm going to ask you a question. What makes Verano better than any other top MSO in the industry?
It's operational efficiency, it's consistency of product, and it's really just the focus on. When I say operational efficiency, it can be in a combination of multiple things, right? In our facility, there's not a square inch of any facility that the executive leadership team doesn't know. So we're very tied in, top to bottom, and across the board from retail to cultivation, all the way into the C-suite. So I think operations are as buttoned up. It's really what we hang our hat on. And I would say from an expense control perspective, we just know how to operate, with the best of them. I mean, we control our expenses, and that really shows up in the numbers on a quarter-to-quarter basis.
What would you say is your biggest hurdles that you have to face over the next 12 months?
As a company or as an industry?
As a company.
I would say as a company, it's continuing to, gain market share and stabilize, right? Because we're operating 13 separate businesses. So I would say for us, it's just maintaining, the efficiency of that operation.
Where do you see the industry, crystal ball, forward-thinking statements? But as you said, let's let SAFE take its time. That benefits you as a company. But where do you see this industry as a whole in 3 years from now?
There's a lot of variables at play, right? I mean, and there's a lot of scenarios. I had a conversation earlier, and the gentleman I was talking to said there's not enough companies that have pointed towards a North Star in directing their business. They're just out there kind of operating freewheeling. And for me, I said, you know what? We almost have two North Stars, right? Like there's the North Star of maintaining what we can control. So again, it's surviving in this industry, but for us, it's also thriving. And then there's the bigger, brighter North Star, right? That could potentially be any type of federal moves. So where this industry could be in 3 years is, us fully included into the capital markets, which means more efficient trading. I worked at the NYSE and I saw exactly what a designated market maker can do for your stock and what institutional dollars can come in and do. So just that alone is game changing for our space, getting new dollars in. But you also start to get interest from other spaces, right? I mean, do we look at agricultural commodities? Do food and beverage start to come in? Does cosmetics? Does alcohol? So that really, it's endless, right, opportunity for this space. But I would say first and foremost, it's getting that transition into the U.S. And I would hope, no predictions being made here, but that we've at least made some progress in 3 years towards total U.S. capital markets inclusion, which will allow us to operate like a normal business and then open up a variety of opportunities going forward.
Do you think when the dust settles the end here that in the end, there's probably only going to be 4 or 5 companies left in this industry, but with massive market caps?
I don't think that's out of the realm, right? Especially, again, the longer SAFE takes to pass, the more you're going to start to see consolidation in the space, and it's forced consolidation. And, again, I mean this wholeheartedly. I mean, we don't want to see companies go under, but, sooner or later, there is economies of scale. Like right now, I think what's keeping the market very fragmented is there's a certain set of number of license in these limited license vertically integrated states.
Yeah.
And if you could open up and have economies of scale, the small companies, we've seen what happened, to smaller I mean, look at the automotive industry. I grew up in the Detroit area, and there used to be Studebaker and Plymouth and, a ton of automotive companies, and you saw what happened. And there was the big four. And that's not my prediction, but I definitely think they're halfway to strong consolidation in the space.
Go Blue?
Go Blue. Bo Schembechler was a god in our household. So,
What was up with that defense in that game? How do you lose to TCU?
It was them completely looking ahead to the next week, but we're coming back stronger this year. Return the most starters of any of the teams that were in the college playoff. But
Alabama, Bryce Young.
Here's my prediction shot. I have more faith that Michigan will make it back to the college football playoff than SAFE getting past. But there could be both. Hopefully, there's both that that ends up happening. But
hey. Big NFL fan too, and that I know people laugh, but the Lions, I'm telling you, there's something there.
Every year they do this to me, and I read this quote a while back. I read a quote a while back. They say being a Lions fan is like watching the movie Titanic and rooting for the ship. So it's like it's going to replay every year, and the ship's always going to go down. But I'm telling you, Dan Campbell. Think about the grittiness. I mean, it's like there's a lot of parallels to the cannabis space. So, and we're not biting kneecaps off, but we're definitely.
Say, you bite kneecaps with get the employees going, or what?
I'll bite a kneecap if I have to, but I haven't had to yet. So.
Well, it's a nice job, obviously, to say the least. Second consecutive, as I said off the top, but as I said, like. We try to encourage and educate a lot of investors, and it's all about managing expectations. And let's face it, once people got involved from an investment standpoint within this industry, it was a quick buck. And we're trying to obviously educate people not to look at share prices every day. Some of the feedback that we get is industry's a scam. There's so many companies that are down 90%. And we can continue to reiterate that, again, this is very beginning. There's a lot of companies that are going to have to be cash flow positive, and that's the pure focus versus having an expansion of market share. But would you not agree that the focus now is all about sustaining business fundamentals versus less than, say, expanding into all these different states and having a market share across the country?
100%. And again, if you see us execute on anything, it's going to be accretive to the business, right? Like we don't buy an asset just for the top line. And I think, you're seeing some companies understand the integration and actually streamlining can take away your focus from just purely operating the business. But, it's hard because the fundamentals don't speak to valuation. And you put us into the U.S. capital markets. I mean, I worked at a newspaper, a public newspaper, and I was, the head of capital markets and treasury. And I mean, I had a mid-single digit $400 million credit facility, and I was just trying to keep the lights on to sell enough papers. And so,
Wow.
I don't think people truly understand what U.S. capital markets inclusion mean. And I also don't think they understand what 97% retail traded means, because back in the day when I worked at, Fortune 50 companies, if there was any type of headline pressure or anybody tried to short, or there was and the company was very buttoned up and thorough, you would see these institutions just step in and put their foot on the throats of these investors. And we haven't seen that yet, because you're just we're fighting for the same dollars. It's literally trading hands. There's not a lot of new money coming in, but I don't worry. And my boss would actually agree with me, so I can make this comment publicly, but I don't worry about the stock price. I mean, I will at some point, because my life's work is invested in this space and in Verano. And obviously we wanted to see it be very successful, but we've made this point on our Q3 earnings call that we don't run the business based off dislocations in the market, because if we did, or if we were trying to strive to a certain margin percentage, we're not going to run the business the way that our shareholders would want us to.
What do you mean by that? Can you give an example?
So you're going to, you could cut through the muscle, you could cut into the bone, where people are really trying to manage expenses to, hit to a certain margin percentage in a quarter, when in reality, we talk about fluctuations and pointing to free cash flow, right? And then you also look at the stock price, you can make decisions based off what the current market may want, but in the long term, it might not be the best benefit of the business. And we run the business based off of what the long-term potential and growth profile looks like. And I can tell you that's resonating. Again, you highlighted it. We were up 12% year over year to 227 million on the top line, 1% sequentially. And you're starting to see that stabilization. You're starting to see the strong margin profile continue to come through and cash flow come through. And that's based off of us not looking at the stock market to make decisions. It's based off of what the growth potential we see in each state. And another thing that we do, and I think this is, definitely what sets us apart, and I think it's also a benefit of not having sale leasebacks, is we don't have to put a massive amount of supply into the market to justify, say a $50 million sale leaseback. What we can do is we can pull back our inventory, which you're starting to see happen. We highlighted Illinois, because dispensaries are slowing, right? They're not opening. You have these social equity licenses that, they're issued, but there's just no access to capital to get these doors open. So what we did is we're shutting rooms down. We're appropriately supplying the business because we understand what the market should dictate, and we hope people suit. But I'm telling you, we always.
You don't think enough people are doing that? Like more people?
I think you're starting to see that run through. I think a market like PA, I think you saw that initial rush of this massive amount of supply coming into the market, and then I think you saw some smaller operators again selling whatever they could at a fire sale to try to keep the lights on. I think you're starting to see that flush out, and then I think you're going to see operators like us really say, okay, what is the appropriate demand in the market? Let's not oversupply. Let's make sure we're getting ahead of that. But again, this is the challenge of the space. Talked to me 3 years ago.
Stories I heard in Benzenga, and I couldn't believe this, but one story was that there's been examples of people opening up dispensaries that are not even aware of a 280E tax code.
Yeah,
that gives you an example as to how much we know the industry has evolved and grown, but a real measuring stick to show, wow, we've got a long ways to go, right?
Absolutely long way to go. And when you have, you have the pageantry of politicians gaining votes on, the social equity forum and issuing these licenses, and they're like, well, good luck. Because I can tell you, again, go back to, our founder's history. He's invested every dollar. He's a self-made man, went into debt to open up a restaurant to get to the point he's at now. He's rolled everything into cannabis, but friends and family and you're raising funds and now you're going to, smaller social equity players and saying, okay, good luck, go knock on your neighbor's door and try to find funds to get your dispensary open. Because back in the day, you could get a loan from anybody. And I think that was, the biggest disservice. And I was actually, in this industry in 2018, when everyone was going public, we were all fighting for the same dollars. Yeah. So everyone overinflated valuations. There was always these promises of all these massive, growth opportunities, and banks got exhausted lending money. And if you want to go out and get $1 million loan to open up a dispensary, you might not even be able to get it. But if you do, there's going to be, massive OID. There's going to be 35 to 40% interest and all in fees. And
think about that.
So you have 280E and that. And you have to get the doors open, and you're trying to learn how to operate in this industry. It's just it's unbelievable what these politicians are doing to limit the space. And the main hindrance we have to anything that we're doing is regulation. And again, go back to the 100 million plus in additional tax that will be owed in 2022 based off of 280E, and that's 100 plus. That's being conservative. So.
We have this playlist on our YouTube channel called Where Are They Now? And it talks about all these old executives in cannabis from 5-6 years ago that have completely disappeared. I hope one day I can do one of these based on the 280E tax code, right?
Well, if I'm gone, you can come find. I told you, I'm moving to the mountains when this is all said and done. But no, it is
Not going to
amazing.
see on a beach in 2047 with Andy Dufresne from Shawshank Redemption.
Well,
Like
it's seriously pay off that $18 million loan. That's what George said. I can retire then. So 2047, I'll retire after we make our final payment. But it is interesting. But I will tell you, the luxury of having someone like George is he never set a deadline for when he wanted to walk away. He said, "I'm going to walk away when the company's in good shape, and we are where we need to be as a company in the U.S. capital markets, and we're just not there yet." So he's fully engaged, grinding every day, and I will put his CEO and operational prowess up against anybody in the space.
Yeah.
So.
I met a gentleman last night, very successful, a man of means, and he said, "I'm a nobody. I'm just a medium-class hustler." And I love that because that's basically guys that are self-made, right? So
Yeah.
Anyway, Verano Holdings trades on the CSC under the ticker symbol VRNO and on the OTC under the ticker symbol VRNOF. Aaron Miles, Chief Investment Officer, thanks for checking in. Let's keep in touch. Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.